Yesterday we did get our gap up, and we came back into prior resistance, held, and then moved higher. So that's kind of traditional way to measure if buyers are starting to take more control. We did have incredibly low volatility yesterday, sub 50 basis point range in the market. We're moving back up towards this resistance area where we failed. Started this down move to 211 and change. IWM 122. I think that's the same spot where we were yesterday morning when we talked about it. So right on the open, we went up to that 2250 and failed. We came down at 121.50. So I believe we talked about both those prices in yesterday's morning meeting. This is where we failed here. 21.50. So we'll continue to watch this here. If it gets a close above 122.50, that would be interesting to me. Let's show a little bit of relative weakness versus the SPY. Close back above this area. It brings this 124 to 124.5 back into play. Under Armour. So I tried to play it for a bounce about 20 minutes ago. They're on the conference call right now. There's nothing in the released earnings that I could see that would lead it to be down this much. Just came out that Piper's defending Under Armour following the earnings release. So 32, it's a bit of a battleground, longer term. So it had this multi-year uptrend, like a lot of stocks we've looked at recently, and then similar to the market, I guess. And then in 2015, the market topped out and got volatile. A lot of things went into these longer consolidations. But the one thing that's a little bit different about this one is it's clearly making a series of lower highs. Now it's coming back in and testing this low from the beginning of the year, which is right below 32. That's where it is right now. It's already traded 6 million shares in the pre-market, normally trades 3.5. It does look like maybe they're going to try to take it down to this late 2014, the October 2014 low, 2 years ago, which would bring it into the 30 area. Seems like a stretch to me, but anything's possible. Let's zoom in on the pre-market action just to see what we did here. So I started looking at it here. It had this leg down, got aggressive into the flush through 32. It did bounce $1, and got out at 95%. And so anyway, I could do the morning meeting. It looks like right now it just made a higher low. So if I was trading it right now, what I'd be looking at is, okay, I put it low here a half hour ago, and now it's being bought higher. So what I want to see is it start to hold above 32.15, and I look for a bounce probably all the way up back up to here, this area up here.
Bob is kind of poised for a breakout. Seems like it gets back to 105. It's interesting to me. And then ULTA is been kind of tracking this. It's looking for some sideways price action on the daily.
So BHI that crushed the EPS, but the revenues were light. But this is really an example in this sector, the oil services sector, is with the lower prices and demand, could they bring down their expenses to kind of help the stock bottom? And so let's look at the daily. And so we've seen this in a bunch of these names. They already obviously put in their bottom when oil bottomed at the beginning of the year. And the question is, what would the profitability look like as prices started to rebound and they brought their expenses down? In this case, the EPS number was much better than expected, even though the revenues were a bit light. And so that brings this 55 level into play this morning, I guess. That's where it failed in November of last year. And above that, I guess it's 56.70. Normally only has a buck range. Could move a buck and a half, $2 today. Actually, bids 32 in UA again. So what we're going to look for on the open right on this one is what does it do in relation to this 55 level. There really is no support. At least 54. The real support is 53. Lower to closer to 53, 53.30. So how shallow is the pullback on the open, and then does it get back above 55 and start holding? So look for that similar pattern we've seen in other names that have trended up recently intraday. By the way, the earnings season, now we're in the middle of earnings season, and this and next week are the busiest weeks. We are starting to see, we saw it in Netflix, we saw it in Microsoft, stocks on, especially technology stocks, good news. First day, a little bit of profit taking, but holding gaps. And then the next day, starting multi-day trends. So keep that in mind for those of you who are looking to capture larger moves. SONC, this is one I was looking at last night, actually. Wanted to see how much this one would pull back. It came down to $23. They bounced it to 24. It's opening below 23 this morning, so sellers look to be in control right off the bat. The big one here is guiding the same-store sales lower. The expectation was for small growth. Instead, they're saying negative growth on same-store sales, which for those of you who aren't familiar, that means that existing location will have negative growth, which is not great. So this is a pretty wild consolidation over the last year. Twice got it to the 36 area. And now it's gapping down to right here to 2250. So similar to Under Armour. So it had a nice multi-year uptrend 2013-14 with the market. Actually then went vertical maybe during the fast food craze a couple of years ago. So yeah, I mean it's right here 23, 22 and a half.
Their kind of fundamentals of the company changed at the end of August. Basically, unloaded debt to the bank, so changed their financial outlook.
It's only done 72,000. Normally does 1 million shares, so we're probably looking at. Could easily do 3 million shares today, 3-4 million shares. See what it does in relation to 2250 right on the open. Potentially a little bit of resistance into this 2280. We need some more volume on this one. The market's going to have to open. UA is creeping higher. So again, if I was old school just trader, I'd be pretty happy with, okay, it failed here, bounced the dollar, came in, moved sideways for 10 minutes, and then starting to move up again. What does it do here? First thing, 3250 to 3260, and then you kind of see. Time Warner. So TWX traded me really well yesterday. Right on the open, shorted with the 89 seller. And, oops, maybe it was an 88 seller. Yeah, so you can see this. 88 seller down, flushed through 87, got long, started to get long into this area here. Had a little bit of a bounce, made the new low, and then had the real bounce. But was very clean. What made it particularly easy in terms of making money on the second leg was after it actually bottomed here and got above 87, it consolidated, kept on holding around this 10-15 cent area, and then when it broke above 30, it went up 70 cents. So that was clean. Spent some time up there at 88, couldn't get above, and then broke back to the downside. Looked like it was being accumulated higher, actually was. So this was pretty good. I think I had sold here and maybe got stopped. Bought back into 87.30s. Then when I was off the desk, I believe I got stopped out. Got stopped out here into this bar. So we had a 1.5 bounce, and then we had a move back down to 86.70 or so. We want to have alerts 86.70, 86.80 this morning. See if that area continues to hold. And then in terms of buyers in control, I think it would have to be back above 87.40, which it's playing with in the pre-market. The idea really on this one is I just think hedge funds look at it, they assess the risk of the deal getting held up, how long the deal will get held up. But I think the mid 80s area, anywhere between 85 and 86.5 would be my expectation, where it puts in a bottom and can drift its way eventually back up to 90, maybe even to 92. So T-Mobile right on the open popped above 50, then came in $1. And when it came back up to 50 here, I thought it would roll over, but eventually it did start to consolidate above 50.10. I'm sure people got long here. Perhaps they held it into this dropout below $50, then held tight again, and then once it took out the morning high, trended up. Let's see how much it trended up. Trended up $1. So it was clean once it took out the morning high. And that's what you want to look for. Something that's strong on the open and fails. If it can actually consolidate around the morning open and then break to the upside, that's usually good for another leg higher. In this case, consolidated and broke to the downside. I'm sure stopping some people out here. Maybe people bought it back above 50.20. It got above the morning high. You got your $1. So, but what we really want to see during earnings season is tight consolidations, where that if you do get stopped here, it's very tight, so you can risk 10 cents again, 15 cents. So the risk reward is good for if it has a second leg. Then Microsoft, mentioned it earlier, was just a second day play. It's much less volatile stock than Netflix, but good news. First day didn't break out. Second day took out the intraday high, 60-40-ish or so, right on the open, held it the rest of the morning. Started another leg. It's much less volatile than Netflix. It's the major difference. And took out the prior day's pre-market high at the end of the day. So no reason to think this can't work its way up another $1 or $2. All right. Apologize for the late start again. My first game plan just didn't save and wasted a lot of time re-putting it in, inputting it. There's a bunch of stuff after the close. I believe our big one is BABA, which we know in the last earnings it gapped up. I lost track of it last week, or I would have bought it back at $100. I sold it at flat around 106.50, 107, something like that a few weeks ago. It's in a great uptrend. So, it had this move on earnings right here. We bought into this pullback. I think I got stopped out right here, then bought it back again, pretty much into the low right here, and then caught that move up to 104. I did buy back on this pullback and then got flat, I think around here. But it has a pretty good history of coming back when it gets extended the upside. It has good pullbacks like every time. Obviously, this one brought it back to the longer term trend here. So if you miss it, it always seems to give you a chance. 108 to 109 is going to be the area we're looking at, I guess, after earnings. If it drops first, I would think this 98 to 97.5 be interesting. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.